Welcome to the Deep Dive. Today we're diving deep into Fiserv Inc., a major player in the financial technology world. You sent us some sources on them with a particular interest in their dividend history and acquisition strategy. We'll cover all that and more as we figure out, is Fiserv stock right for your portfolio?
Well, Fiserv has a long history, going all the way back to 1984. What's fascinating is how they've grown, acquiring over 24 companies throughout their history. One of their biggest moves was the acquisition of First Data Corporation back in 2019 for a whopping $22 billion, one of the largest financial technology acquisitions ever.
It seems like they've really used acquisitions to shape their place in the market. So what's their overall financial performance look like now?
So Fiserv trades on the New York Stock Exchange under the ticker symbol FI. Currently, their stock price is around $208.58, which puts their market cap at about $117 billion.
Okay, so that puts them in the large cap category. But what about their potential for growth?
Well, Zacks gives Fiserv a buy rating, indicating potential for short-term price increases. Their analysis also highlights impressive historical and projected EPS growth. Even their cash flow growth is positive.
That all sounds promising, but we need to consider more than just growth. What about their valuation? Is the stock price justified?
That's where things get interesting. Zacks gives them a C grade for value. This suggests that while they have strong growth potential, their current stock price might not be a bargain.
Okay, so potential investors need to weigh that growth potential against the current price. Now let's dive into what's driving this growth. Their innovation pipeline. What kind of products and services do they offer?
Fiserv has a diverse range of products catering to various business sizes. For larger companies, they offer Carrot, a platform that focuses on streamlining payment processing and creating better customer experiences. CardHub focuses on the growing market of digital payment cards. And for smaller businesses, there's Clover, a popular point-of-sale solution.
That's a pretty wide range of products. It seems they're aiming to be a one-stop shop for businesses of all sizes in the financial technology space. Now let's get to a crucial question for many investors. Dividends. What's Fiserv's dividend policy?
Unfortunately for income-focused investors, Fiserv does not currently pay dividends.
So no steady income stream from owning Fiserv stock. That's a key consideration for investors to keep in mind.
It is important to note that some growth-focused companies choose to reinvest their profits back into the business rather than pay dividends. This strategy prioritizes expansion and future growths over immediate returns to shareholders.
That makes sense. While we're on the topic of financial performance, what about share buybacks? Has Fiserv been repurchasing its own stock?
While our sources don't provide specific details on share buybacks, it's definitely an area investors should investigate further. Share buybacks can be a way for companies to return value to shareholders, even if they're not paying dividends.
Okay, so you're saying investors should look beyond dividend history and dig deeper into the company's financial strategies. Now let's shift gears and consider the bigger picture. How does Fiserv's business impact the overall economy?
Well, Fiserv plays a vital role in the financial ecosystem, facilitating transactions and providing essential services to a wide range of businesses. Their impact on the economy is significant, influencing everything from consumer spending to business investment.
That's quite an impact. It seems like understanding Fiserv's business goes beyond just looking at stock prices. Now let's talk about ESG factors: environmental, social, and governance. These are increasingly important for investors who want their portfolios to align with their values. What are the key ESG considerations for Fiserv?
While our sources don't explicitly detail their ESG initiatives, a company of Fiserv's size and influence in the financial sector likely faces significant considerations in areas like data privacy, financial inclusion, and responsible lending practices. These factors can affect a company's long-term sustainability and reputation.
It sounds like potential investors should research Fiserv's commitment to ESG principles and how they're addressing these challenges. Now, to sum up everything we've discussed so far, let's break down the pros and cons of owning Fiserv stock.
On the positive side, Fiserv has demonstrated strong growth potential. They're a leader in the financial technology sector with a diverse product portfolio that caters to a wide range of businesses.
So there's a lot to like about their position in the market. What about the potential downsides?
Well, as we discussed earlier, they don't currently offer any dividends. Their stock might also be overvalued at the current price. And while we don't have specifics, their involvement in the financial industry means they're likely exposed to ESG risks that investors need to consider.
So there are both opportunities and challenges with this stock. Ultimately, the decision of whether Fiserv is a good fit for your portfolio depends on your individual investment goals, risk tolerance, and how much you believe in their long-term growth story. Do you prioritize capital appreciation over dividend income? Are you comfortable with the potential volatility that comes with a high-growth company?
These are all important questions to ask yourself before making any investment decisions.
That wraps up part one of our deep dive into Fiserv. In part two, we'll take a closer look at their acquisition history and delve deeper into some of the complexities of their growth strategy. Don't forget to check out our YouTube channel and let us know in the comments what you'd like us to discuss in future deep dives. We're always looking for new and intriguing companies and topics to explore, so hit that subscribe button and stay tuned for more.
Welcome back to our deep dive into Fiserv. We've already touched on their impressive growth through acquisitions, but let's unpack that strategy further. They've absorbed over 24 companies, a complex feat in any industry.
Yeah, and they've been at it for a while, too.
Yeah.
Their first acquisition happened just 2 years after their founding in 1984, back when they went public on the NASDAQ. Early on, they acquired Citicorp Information Resources in 1991, pushing them into the world of commercial banking and credit union core account processing.
Yeah. That was a key move, positioning them as a major player in a core area of financial services. They followed that up in 1995 by acquiring Information Technology, Inc., ITI, based in Lincoln, Nebraska. What made ITI so valuable was their premier platform.
Premier. That name does sound familiar.
Yeah, at the time, it was the most widely used account processing platform in the U.S. Acquiring ITI expanded Fiserv's client base and solidified their position in the market.
So they were strategically targeting companies with established technologies and customer bases. But technology, especially in the financial world, changes rapidly. How did Fiserv adapt to the rise of online and mobile banking in the early 2000s?
Well, they recognized the shift toward digital financial services early on and made a bold move in 2007 by acquiring CheckFree Corporation, the leading provider of online banking and bill payment solutions at the time.
Acquiring the leader in a rapidly growing market, that was a shrewd move.
It was a calculated risk that paid off. By integrating CheckFree's technology and expertise, they positioned themselves at the forefront of the digital banking revolution.
That foresight was crucial to their continued success. Did they continue this strategy of acquiring companies at the forefront of new technologies?
Absolutely. In 2011, recognizing the increasing importance of mobile banking, they acquired MCOM, a New Zealand-based company specializing in mobile banking app development. That same year, they also acquired CashEdge, known for their innovative payment solutions, including Pop Money, a popular platform for sending and receiving money electronically.
So they weren't just focused on traditional banking, they were actively expanding into emerging areas of financial technology. It seems like they have a knack for identifying companies with cutting-edge platforms that can be integrated into their ecosystem.
Precisely. They continued this trend in 2013 by acquiring Open Solutions, Inc., gaining access to their DNA account processing platform. It's a testament to Fiserv's long-term vision and their ability to execute on their growth strategy.
It sounds like they've mastered the art of strategic acquisitions. But have they continued this approach in recent years?
They have. In 2020, they acquired Bypass Mobile, an enterprise point-of-sale platform, further enhancing their omni-channel capabilities. This acquisition allows businesses to seamlessly integrate online and offline transactions, staying relevant in the ever-evolving retail landscape where the lines between online and in-person shopping are blurring.
So they're staying ahead of the curve in the retail space. What about other areas of fintech?
Well, they've made several strategic acquisitions in recent years. In 2021, they acquired Ondot Systems, Inc., a company focused on digital experience platforms for financial institutions. They also acquired NetPay, a payment facilitator, broadening their reach in payment processing. And recognizing the specific needs of the booming online restaurant industry, they acquired BendoBox, a provider of online restaurant operations technology.
That's a diverse range of acquisitions, all focused on key growth areas within financial technology. They truly are building a comprehensive network of solutions for businesses across various sectors.
And they're not slowing down. In 2022, they acquired Finxact, a company specializing in cloud-based core banking services. The move towards cloud-based solutions is essential for businesses needing flexibility and scalability in today's dynamic environment. Then, in 2023, they acquired Skytef, a major player in Brazilian payment solutions, demonstrating their global expansion strategy.
It's amazing to see their global reach expanding. So they've got a strong presence in traditional banking, online and mobile solutions, point-of-sale systems, and now they're moving into international markets. What's next for Fiserv?
Well, their latest venture takes them into the world of embedded finance with the expected acquisition of Payfair Inc. in 2025. Payfair specializes in embedded finance and program management solutions, essentially integrating financial services into non-financial platforms.
Embedded finance. Could you elaborate on that a bit? It sounds intriguing.
Yeah, think of it as integrating financial capabilities directly into the user experience. Ride-sharing apps offering payment processing or e-commerce sites that provide lending options are examples of embedded finance.
That's fascinating. It sounds like Fiserv is positioning itself to capitalize on a trend that could fundamentally change how we interact with financial services.
Exactly. This acquisition demonstrates their commitment to staying ahead of the curve and identifying emerging trends in the financial technology landscape. By bringing Payfair into the fold, Fiserv is poised to become a dominant force in the embedded finance market.
It's clear that Fiserv has a remarkable track record of identifying and acquiring companies that align with their long-term growth strategy. But as we've discussed before, acquisitions come with their own set of challenges.
That's an important point to remember. Integrating so many different companies with their own unique cultures, technologies, and processes is a complex undertaking. There's a lot to consider, from managing potential cultural clashes and technological hurdles to navigating the financial risks and regulatory scrutiny that often accompany large-scale acquisitions.
Those are valid concerns. In the next part of our deep dive, we'll explore these challenges in more detail. We'll examine the potential risks and complexities associated with Fiserv's aggressive acquisition strategy and discuss how investors can assess their ability to successfully manage this intricate web of interconnected businesses. Welcome back to the deep dive. We've spent this episode unpacking Fiserv's incredible growth through acquisitions. But as with any business strategy, there are always two sides to the coin.
Absolutely. Acquisitions, while potentially transformative, are not a guaranteed recipe for success. Integrating different companies, especially in a fast-paced and constantly evolving industry like financial technology, can present a myriad of challenges.
So let's flip the coin and examine the potential downsides. What are some of the pitfalls Fiserv needs to be mindful of as they continue on this acquisition-heavy path?
Well, one of the biggest challenges is cultural integration. Each company they acquire comes with its own distinct culture, values, and ways of operating. Successfully blending these diverse cultures into a cohesive whole is absolutely critical for maintaining smooth operations and keeping employee morale high.
It's like trying to combine different puzzle pieces that weren't designed to fit together. Clashes in company culture can lead to internal friction inefficiencies and ultimately valuable employees choosing to leave.
Exactly. And it's not just about people and culture. There's also the immense task of technological integration. Imagine trying to merge different software systems, data formats, and security protocols. It can be a logistical nightmare, especially when dealing with sensitive financial data.
Any missteps in that process could have serious consequences for both Fiserv and their clients. Data breaches and system outages are not something you want to become known for in the financial technology world.
Absolutely. And we can't overlook the financial risks. Acquisitions are expensive, and integrating a new company's operations often involves restructuring, streamlining processes, and sometimes even job losses. These actions can definitely impact profitability in the short term.
So Fiserv needs to carefully analyze each acquisition, weighing the potential benefits against these inherent costs and complexities.
Indeed. And there's another layer to consider: antitrust scrutiny. Given Fiserv's size and their dominant position in certain segments of the financial technology market, their acquisitions could raise concerns about reduced competition.
So regulatory bodies might scrutinize their acquisitions more closely to make sure they are not stifling innovation or potentially harming consumers.
Precisely, navigating these regulatory hurdles adds another layer of complexity to their already intricate acquisition strategy.
With all these potential challenges on the table, how can investors assess whether Fiserv is effectively managing these acquisitions and mitigating these risks?
Well, investors need to look beyond the headlines and delve into the specifics of how Fiserv integrates these acquired companies. While their track record is impressive, past success doesn't guarantee future results. It's essential to evaluate their integration strategy, their ability to retain key talent from acquired companies, and their ongoing commitment to innovation.
So due diligence is paramount. Investors need to scrutinize their financial reports, consider analyst opinions, and be on the lookout for any red flags that might indicate integration issues or an unsustainable debt burden.
Exactly. And it's always a good idea to compare Fiserv's performance to that of its competitors. How are other companies in the fintech space managing their growth? Are they facing similar challenges? Are there any alternative investment opportunities that might offer a better risk-reward profile?
These are all excellent points.
Yeah.
Investment decisions should always be based on a comprehensive understanding of the company, the industry, and the broader economic landscape.
And never forget that investing always carries inherent risks, and there are no guarantees.
Well said. In this deep dive, we've explored Fiserv's remarkable journey from its origins in 1984 to its current position as a global fintech powerhouse. We've analyzed their impressive acquisition strategy, their diverse product portfolio, and their strong financial performance. But we've also shed light on the potential challenges and risks associated with this rapid growth through acquisitions.
Hopefully, we've armed you with the information and insights you need to make informed investment decisions.
Now it's your turn to weigh the pros and cons. Consider your own investment goals and risk tolerance and decide whether Fiserv aligns with your investment strategy. As always, thanks for joining us with a deep dive.
Don't forget to subscribe to our YouTube channel and let us know in the comments what companies or topics you'd like us to cover in future deep dives. We appreciate your feedback, and we'll see you next time.